start, I just quickly want to refresh your mind. Mpile. So give your mind to me so I can refresh it. When we do a stock take, and I count, there is 7 bicycles. I need to give a money value to the items. But how am I going to do it? Because now I'm at the end of the year. I've bought these bicycles throughout the year at different prices. So, but now I'm going to give this a value. So there's the 3 methods I taught you. The specific identification, which goes with stuff that you can see. So that would be like your TV screens, it would be cell phones, it would be your very expensive watches, it would be cars. That's specific. I can see that item was sold and that item I originally bought for that. Okay? The second one is the FIFO. So I assume the stock that is left over that I can see is the stock that came in last. First in, first out. The old stock I sell first, so what is left is the new stock. So I value that stock at the newest prices I got. Weighted average, exactly what it says, I get an average price. Okay, so now we're going to do a little bit more than just get the closing balance. But let's see. They say, Nosiza is the owner of Sunglass City, selling one type, and you will see, it will only be one type always. Because this whole thing I'm going to do for every single thing that's in my stock. So if I've got paper clips this size, can you see it? This size paper clips, I'm going to do the whole process of valuing that specific paper clips. Now I also have paper clips that is small and colored. Then I'm going to go through the whole process again for that specific small colored ones. Right. You can't just mix them and say, oh, the average price of this is so, so, and so. You're going to do each item, each sort separately. You got that? Okay, now, they say, he does one type of sunglasses. The financial year is 29 February 24. Where comments or explanations are required, you should quote calculations, figures, trends, and give a reason. Doesn't it sound like analysis? Here we go. Calculate the weighted average cost of one pair of sunglasses. Now they will always give you the information most of the times like this. So remember when we did periodic last year? When we did the periodic system, I said, always remember, it's the opening plus the purchases less the returns plus the carriage plus the customs, right? And that gives you the value of the stock available to sell. If I subtract the closing, I get the cost of sales. Okay, so I'm mainly always working with that. So can you see there's the opening, right? There's the closing. There's the purchases, right? Now I want to look, was there any returns? Can you see? They don't say anything here about returns. The next page is another question. So it's got nothing to do with this one. Is there any returns that I'm missing? Yes. Then December is a 20 Rand return. A 20 units return. Okay. Did they give me any information about carriage and customs? No, I don't see anything. Is everybody shut? So there's no carriage and there's no customs. So now I go and I look. If I want to calculate the weighted average, I'm going to draw a very long line. On the top I'm going to put the rand value. At the bottom I'm going to put the units. Okay. So if I look at my information, I see opening is 620 units. The rand value 17 19 Dalmatians. Then I go, look, what's the next thing I want? I've got the opening, so now I'm looking for the purchases. So the purchases, they give me the totals here at the bottom, but can you see they already subtracted what they did here in this question? They've already said purchases less returns is that. Can you see it? They've already done it for you. So I go say, okay, my purchases less returns, it is 2380 units, and the rand value is 8781. Okay? There was no customs, there was no carriage. So if there was customs and carriage, I would literally just add it to the rand value. I will not add the units again, because it's just the same unit that was purchased, which I'm loading the cost of the unit. For instance, I buy a Ferrari in Italy. Now let's work in rands. I pay R1,000,000. That's the purchase price. Now I need to get that Ferrari to the border so that it can go on a ship. That's going to cost me carriage. I have to get it on the ship. The ship comes all the way to Cape Town. That's going to cost me money, carriage. Now I need to get that Ferrari on South African soil. They're going to charge me customs. That's going to cost me money. I need to get that Ferrari from Cape Town to Pretoria, carriage. That's going to cost me money. Can you see everything is loading the price? It's no longer R1,000,000. It's most probably closer to 5 million rand at this stage. But can you see it's still just one Ferrari? The units didn't change. Okay. So now, in maths, you would have said equals and you would have added and divided. You don't have to do that in accounting. You can just quickly say, what is this total here? 1719 plus gives me? Anybody? Oh my word. This is going to be a long day. Okay, I already got the bottom for you. What's the top?
7,500,000.
Okay, now say 1, 2, 3.
1,050.
Like that. Okay. So I'm going to say 10.5 divided 3,000. And that's going to give me my unit prices what? 3.5, nothing else. And is there a comma cents? Nothing. Please, if you round off, so in other words, if it's a comma 72835 whatever, and you round it off to 73, here, you clean your calculator and you put the 73 in. Because if you're just going to continue using that to times with the closing stock, it's going to give a different answer than if you say the 0.73 times the closing stock. Okay. I see a lot of hands. Let me just pause that. In this question, if you look, they specifically asked me to calculate. Oh, that's the wrong one. Where's my question? They asked me to calculate the average cost of one pair. Okay. So, in other words, you are used to them asking calculate the closing stock value. Then you would have said times 840. Okay. Which they don't do here. Oh, sorry, can't see that. Okay. Is everybody still fine? So, the number of glasses stolen. Okay. So, what do I do? I have a closing balance of 840. So that's what I physically counted. So now I want my theory balance. I want to see how much am I supposed to have left over. So, remember here you're going to work with units. They didn't ask you, they asked you the number stolen. They didn't ask you the rand value. Okay, so you're going to start. You're going to say, oh, okay, can I move this up? So I'm going to start. I had 620. I purchased 2380. Can you see if there was returns, I would have subtracted it separately if it wasn't given to me like this. So how many units do I have available? Oh, 3,000. And if you were clever, you would have remembered that you already calculated it there. So you would have just transferred it. Then I'm going to subtract my sales. How much did I sell? Oh, I sold 2050. So I'm supposed to have left 950 units. Does that make sense? I'm supposed... The 20 is already subtracted, baby. Oh, okay. So the 950 is what I'm supposed to have left. But if I go look, I see, oh, I only counted. So now I take the closing stock that they give me, the 840. So 110 is missing. Okay, that's an easy 4 marks. Ne? I want you to get hope again. So let's go. Next one, they want to know, so I've done that, 4 marks. Calculate the rand value of the sunglasses stolen using the weighted average stock valuation method. Now we must already calculate the price per sunglass. So you're just going to say 110 times 3.5. And this will most probably be 2 bagel marks because they're going to look at that and they're going to look at that. And what is it? Five Dalmatians. 385 Dalmatians. Okay, that's quite a lot of loss, ne? Now they ask me to value the closing stock using FIFO. So when I use FIFO, I'm going to assume, ne, or I'm going to use the newest prices. Okay, so how many units do I have left? So I'm going to draw a line here for myself just to keep track of how many units I already gave a rand value. Okay, so there's 840 units left. How do I know that? Because that's my closing stock. So I start at the bottom. So December stuff was returned, but can you see, I can assume it's from the November package deal. Ne? It's from the, what do they call it, batch. It's from the November batch because the cost price are the same. So, can you see November, I bought 745, of which 20 was returned. So I'm going to use 745, of which 20 was returned, meaning I actually only have 725 left of that batch that cost 4,200. So what does that give me? Okay, so now, can you see of that 840, I have valued 725. So I still need to value 115. So I'm going to take 115 from the batch just before November, right? Meaning August. So I'm going to use the 3750. So I take the 3750, and that gives me what? And then I just total. Is that right? And you can see if I use the FIFO method, I'll get a different closing balance value than when I use the weighted average. Okay? So, that is why the GAR principle of consistency is important. So if a company decides to value these sunglasses at FIFO, he has to continue valuing it at FIFO values, right? So that you can compare this year with last year. Can a business change methods? Can they decide they don't want to use FIFO, they rather want to use weighted average? Can they do that? Is it legal? Because now remember, if the closing stock amounts are different, it's going to influence my cost of sales, which is going to influence my profit, which is going to influence how much I need to pay to SARS tax. So that it can be seen as tax manipulation. So what are you going to do if you want to change your method? You're going to get permission from SARS. It's not unethical, nothing wrong with it, but you need to be transparent about it. So you get permission from SARS. If SARS does not give you permission, you cannot change your method. Maybe SARS will tell you, let's rather start doing it not during the financial year, but at the beginning of the next financial year. Okay. Any questions? Yes, sure. Yes.
So is it illegal to change?
It's illegal. It's not illegal like you're going to go to jail. But SARS can see it as tax evasion if you change your method of calculating without getting his permission. So just inform him. It's like when you go out at night and your curfew is 12 o'clock. But now, tonight, you want to go out till 2 o'clock. There's a special occasion, whatever. What's going to happen if you don't tell your mom and you come home 2 o'clock? She's going to explode. But if you talk to her before the time, chances is that she might say, no, you can't. But chances are also big, thank you for respecting me. Yes, you are old enough, you are usually very diligent in coming home at 12, so this time I'll allow you. Can you see, it's the same situation. But if you don't tell your mom can immediately, she's going to think you're lying to me. You were lying to me. I cannot trust you in the future.
Okay.
Yeah.
Is there a method where if I change it, it's going to be suspicious?
Yes.
Let's say I did first out, then I go to sin because I see it's about identification.
Okay, let's quickly, you guys, I want to do this now. I'm recording this because I want you to see this. If I take that 3.5, the weighted average method, I take that 3.5 times 840, what would my closing stock have been? Come, quick. If I use the weighted average, not the FIFO, what would my value of my closing stock be? So I take the 3.5 times the closing stock 840, what would my rand value be?
2,940,940.
Like that. Okay. So, let's quickly go look. So the one is FIFO, the other one is weighted average. Let's go with a round figure. You can now see that this one with weighted average, your cost of sale, your closing stock is smaller than with the FIFO. You can see that. So now, get that concept into your head. So, in other words, let's say I work out my closing stock. Here is 2 rand, and here the closing stock was 3 rand. Okay, I'm not going to make copies now, I'm busy teaching. 2 rand, weighted average, 3 rand. Right, now, let's say I work out my cost price. How do I work out cost price? Opening, purchase, returns, what, less closing. Do you agree with me? If my closing stock is smaller, in the end my cost of sales is going to be bigger than here. You agree with me? I'm not going to do calculations. I'm just using phantom figures. So, what happens if your cost of sales is bigger? So now, I go to my income statement. Sales less cost of sales gives me gross profit. Right. Now let's say, in both cases, my sales was 20. With the FIFO, my cost of sales is now 10. Can you see my profit is going to be bigger? If I do my weighted average now, smaller, whatever. Can you see now, my profit at weighted average is bigger than my profit at FIFO. So they'll be more lenient to allowing you to change from FIFO to weighted average than weighted average to FIFO. Can you see that? So in some of the papers, before the two-paper thing, if you go to the older papers, 2019, 2018, they like to ask you what will happen to your profit if you move from FIFO to weighted average. So I want you to make a note where you say FIFO profit will be smaller than weighted average profit. Does that make sense if I say that?
Always.
Yeah. Why? Why always? Because FIFO always value at the newest prices. And we are living in a time where your newest prices is always more expensive than your older prices. And your weighted average takes the average of everything, so it's usually then a lower one than the FIFO. Okay. Answer your question? Okay. So with this inventory thing, what they like to do is they like to combine it. So a lot of times you will see you'll have a double question where it's the inventory and then they like to combine it with recon, or they like to combine it with VAT. So it would be two short questions as question one. You get what I'm saying? Okay, so in other words, they will say here, stock evaluation and recon. So 2.1 would be stock evaluation, 2.2 would be a recon. They are not related at all. Okay, so meaning, actually, the stock valuation question doesn't count a lot. You get what I'm saying? Okay. The other way that they do is they ask it as one question like here, but then they split it in two. The one would be calculations, like we did here, where they ask you to calculate the cost of sales, the markup, anything like that. The second part will be a problem that they give you. Okay, now let's go look at this problem. So they give me a problem. They say, the information is related to Slimline Boutique owned by Mike Ndlela for the year ending 24. The business sold trousers. What's your problem? What question?
The text.
Oh, sorry, ne? 2.1.4. A whistleblower has informed Nosisa that Misha, who is the salesperson, and Jack, who is the delivery driver for the supplier. Can you see, he doesn't work for me. He doesn't work for our company. Have conspired to sell sunglasses at a reduced price. During an investigation, it was discovered that the sunglasses sold were invoiced to the business. In other words, we were buying our own stolen stock. Nosisa has confirmed that the sunglasses were missing. Now, explain how Nosisa could have proven Jack and Misha guilty of theft of stock. Give 1 point. Okay, if it was a test, I would quit. So let's see. Let's see what they say. Okay, let's not go. Remember, they don't want rocket science. Ne? They look what they are saying here. Use the whistleblower's statement as evidence.
0. 0.
2 marks.
0.
Why do you say 0?
Because what if the whistleblower doesn't like these people and they're lying?
I don't know.
Or what if
But
the
I don't care
whistleblower is
because
the
I
one
just want
stolen?
marks. It's exam. So I just want the marks.
But I'm just
Some-
saying we won't
yeah?
think of this one.
Aye, okay.
Yes.
Next one. Compare, there we go. Compare the supplier's invoice with order forms or the delivery notes to the discrepancies. So what's the discrepancy? It's the stuff that's missing. Okay? So now you want to see that which you are missing is that's exactly what you two were saying. Verify stock records through physical stock take upon delivery. So in other words, they assume that that stock is stolen before it even gets to the shop. You get what I'm saying? Okay. Request tracking evidence of route. Check CCTV footage. And can I quickly look how much marks is this? 2. And can you see here, usually when they do that, they mark very lenient. So if it's a nice full sentence, you'll get 2 marks. If you just say check cameras, you'll get 1 tick. Okay. Sharp, let's go on. Let's see how they blow our mind again. What action should have been taken against Misha and Jack? Provide 1 point for each one. Now, remember, Misha works for us.
Can I say my favorite one?
Yes.
Fire her.
You can fire her, but you cannot fire her without a investigation. What you need to understand, Misha works for you. You've got power over her. So for Misha, or if he's a boy, you can. We're going to hand it out afterwards, not now. For Misha, you can have a disciplinary hearing. You can make a criminal case at the police. Give to me, please. You can make a criminal case at the police. You can suspend her without pay while investigating. Anything like that. Can I do that to Jack? No, he doesn't work for me. So what can I do with Jack? I can go to the police. I can make a case at the police. But I also think I will talk to my supplier. I will report him at the supplier so that the supplier can deal with him. Okay. So let's see.
Can we write illegal actions in the test?
What illegal actions? No, they will mark it wrong. Don't do that. So, conduct, can you see Misha is all the things I told you now. Start deducting money from, it's a boy, from his salary. Okay? You can do anything like that. But Jack, you can't do it because he doesn't work for you. You inform the owner of his involvement or the supplier. He should not be assigned to deal with my business. I don't want him to deliver to me anymore. Criminal charges, pursue compensation from him, which I think is going to not really work. Update contracts with the supplier to include penalties for future unethical behavior. Can you see they talk in a language that no normal person speak? This is not business studies where you have to write word for word. If we mark question paper 2, we mark if we can see what you mean. Okay. Yes, baby. No, you will get 0. Fire would get 0. Can I go on? So, let's go. Problem solving. So the problem solving, first of all, they asked me to calculate. We sell trousers and casual shirts and introduced and sold formal shirts only from November, so we haven't done that the whole year. Okay. Calculate the markup percentage achieved. Can you see here comes your ratios again? So your ratio says gross profit over cost of sales times 100 equals. And you want it for the trousers. Now can you see there's trousers and shirts? So I go look. Gross profit, did they give that to me? No, they didn't. But they did give me the sales. No, but this is cash sales. Let's quickly look. They give me cost price per item and they give me cost of sales. So I've got cost of sales. Selling price per item is 920. Did they tell me how many items I sold? Yes. 560. So times 560 gives me how much? Can you think where my brain is going? I want to get the sales less the cost of sales so I can get the gross profit. No, I can't use total. Is it the same as total cash sales? So they don't do any credit. You can't just assume that. Okay. So the sales is going to be 515,200. The cost of sales is 280. So that gives me a gross profit 511,332. 235. Is that right?
Yes.
So I'm going to say 235 is the gross profit. Why is this not right? Oh, this is why. 234 is the 235, sorry, 200 over cost of sales, 280 times 100, and that gives me what? And remember, this columns here means absolutely nothing. If you wrote the 84 here, you'll still get your full marks. Next thing. Comment on whether the markup percentage would benefit the business or not. What do I want to see with the markup? So let's go look. We are busy with trousers, no? So the markup percentage is 84%. Would it benefit us? Why? Why do you say yes? You just say yes. Okay. What are we going to look at here? What will you look at? Huh? Okay, let's quickly look. How will you know the sales decrease? Because they didn't give you last year. They only give me 1 year's stuff. Yeah. Remember, that is shirts. Okay? So let's quickly go look. We have to now think. So they gave me cost of sales. They gave me totals cash. They gave me stock holding. Oh my goodness. Okay, let's quickly think. If it's 186 days, how many months is it? Because it's easier for us to think in terms of months. What will I do to get months? I divide by 12, nay? And that gives me what? No, it can't be 15 months. That's not right. Divide by 30. I'm sorry. Divide by 30. And it gives me?
6.2.
So I've got 6.2 months. Now let me quickly tell you. When I think stock holding period, you're going to think number one. This is close. Close works in seasons. How many seasons in a year? 4. How many months in a season? 3. Can you see? They are not working in seasons here. Okay. So I will not think it's going to benefit them because they've got too much stock on hand, meaning the stock they have is not selling. I might be wrong. I might be right. Let's look what they think because they are more cleverer than me. Customers will not buy. Okay. Price sensitive customers may choose competitors. So this, can you see there they talk about what I was saying? About it's too long, the stock holding is too long. There's your 2 marks. Straightforward. Okay. You have a memo. No.
How do we know that the customer didn't buy?
Because there's so much stock on hand. Remember, you didn't have to mention that, ne? But you can see it. If your stock is on hand for more than 6 months, people don't buy. Okay. Yes.
So you also compare it to the other clothing items that we have in the shop.
Okay, so what he's saying is you can also, if you look at the other items, if you look at your shirts, can you see this is only 29 days? Just compare those two, then you can see this is not a popular item. It doesn't move. And they didn't ask figures for this, ne? They just comment 1 point, and it's only 2 points. So yeah, go with your gut. Next one. Casual shirt. Okay, so work with me. Comment on how the return of 120 casual shirts would affect the business negatively. So let's quickly think. How many shirts did we buy? So we are talking casual. We had an opening stock of 200, we bought 1,003. We had a return of 120, and the unit sold was 1 to 80. Can you see it's basically 10%, give or take? So how will this affect the business negatively?
Less than.
No, just think buyers' heads. If a lot of stock is returned, what are customers going to think?
Defective.
High return will let you lose revenue. What's revenue? Income. Okay? It may lead to slower sales. It can negatively affect our image. Last night I was having dinner with friends of mine, and my one friend bought a car, and he said he's had this car less than a year, and he's only had the ability to drive with it for 5 months because the rest of the time the car is broken. And then someone else said, yes, I had the same make of car and I also have so much problems with this car. Do you think people are going to, on that table, is going to buy that car? No. And that's the same thing. Rumors. Yes.
And this return is us returning to the supplier.
So, if I look at this returns, this is what my clients are returning. Ne? Because if you go and work out, so this is not what I return. This is what's returned to me. Okay. Chuck.
Yes.
So, next. Next thing they ask, calculate how long in days it will take Mike to sell the closing stock. Now, look at me. Look at me. This is important. Closing stock, not average stock. Number one. Second thing, I'm telling you, work in units. You've got the option of working in rands or units. Units is smaller amounts, it's quicker, it's easier. So, stock on hand. It's closing stock, which is, this is formal, ne? 125 over cost of sales. Now, your cost of sales units is your sales units. Does it make sense when I say that? So how much did I sell? How many units did I sell? 855. Times 365 is going to give me days. Right. Please do not do it in rands, because rands is just such a long calculation. Can you see there? There's the rand one, but they marked the unit one. Much easier. Let's go. Let's just finish the last one. Comment on one other point that might concern Mike about the formal shirts. And now you can look and you can literally name anything. Okay? Can you see the opening was 0 because they started during the year. The closing is a lot. Can you see it sells quite good? There's no returns. The units sold was quite good, but can you see nothing was sold online? Did they say somewhere that we do not sell it online? So that can be a concern, right? Go read through the concerns. I'm just going to show you. They say no online sales. Hey, I got that one right. He's charging a low markup. Nee? Let's see, how low is his markup? It's not 25. And look at casual and trousers markup. Why would this be so low? Okay, so you can say that. Yes?
Why are they seeing the loss of customers?
Where?
Selling no markup, risking the loss of customers.
Okay, so why would they say here risking the loss of a customer? Just remember, some people, no, but you're really, really rude. If I look at this, this is formal shirts, right? So formal shirts is business people, people wanting to buy shirts to go to work. Now, a lot of people think quality comes with price. So if you do not mark it up high enough, if the price, there's not a big difference. So it could be in some people's mindsets that this is not good quality. Right? Go look at your competitors. Maybe the competitors ask 1,000 rand for exactly the same shirt. Okay? Yeah. Okay, I'm going to stop it here.
You're not looking at the better side here.